Hey there, everyone. It's Thursday, July 28th, 2016, and this is the Thursday Let's Talk About Robot Trading webinar. Glad you're here or listening to it on the recording. That's equally as good. We've got over 400 people sign up for this webinar every week, which is pretty amazing, and we get a nice group of people here every Thursday, too. One thing before I forget, I'm going to forget if I get to the end because I'll start talking about trading and I'll forget. Let me know about this time. I've got to reschedule the webinars, the next series of webinars, if you want to have them. And I have gotten some feedback that people do like having them. But is a time of day better? And of course, it's got to be incredibly unanimous, or else I can't change it, and I'll just leave it at 2 p.m. Eastern. But that's what we're at, 2 p.m. Eastern. I know some people listen at night and so forth. So if you have a different time and every single person agrees, or at least we get a majority, I'm happy to do it at a different time. I can work my schedule around you on Thursdays, all right? So now that I've mentioned that, let's get to the program. What do you do when nothing's working in your trading? Well, what do I mean by that? Really, the first thing we should talk about is, what do I mean when I say things aren't working? Well, if I say, quote unquote, nothing's working, what does that mean? You're stopping out, right? You're losing trades. You don't say nothing's working if you're winning tennis tournaments. You don't say nothing's working if you're winning golf tournaments. PGA is on right now, major golf tournament. You would never go say, man, it's not working out if things are going well. So clearly in trading, when we talk about things not working well, we're talking about you're getting stop outs, which means, of course, that you trade with stop outs. And this first slide says stopouts suck eggs, and they do. Stopping out is truly not an enjoyable thing. And let's talk about stopouts real quick and what to do about it, because when we say nothing's working, we're losing. Losing sucks eggs. All right, but however, before we get to the complaining part, what's the good news about stopouts? I'm complaining about them at the very top. Well, what's the good news? The good news about stopouts is that stopouts limit and quantify your losses. When you get into a trade, I mean, why do we use stop losses at all? Why did we all learn to do this or trade like this? Because when you get into a trade, you have a trade idea. When you get into a trade, you're thinking, this is the one that's going to work. And if it doesn't go in the direction you think it's going to go, then your trade idea is terrible, or so the theory hypothesis goes, right? So you put a stop loss in to say, okay, trade idea is no longer working. I'll cut my losses and go on to the next trade. That is a perfectly reasonable and smart thing to do, and that is a plus. That's why we use stop outs. That's a great thing. Number two, they allow you to pinpoint drawdown. If you know how much you lose on a trade, you lose $100 every time you trade, and you know that over time, in the last 13 years, that you've never lost more than 10 in a row, and that's the only instrument you're trading, guess what? You can pinpoint your drawdown really, really well in a very tight range. You can say that 10 losses is the maximum. I lose $100 per trade, $1,000, right? So we can know, okay, well, if the worst I can ever do is lose $1,000, what size account would I trade this on? Would I risk it all and do 1,000? Would I play it safe and do 10,000? Would I play it really safe and do 100,000? It is a really, really nice way to be able to set up your trading plan, to be able to set up your trading business. It's hard to set up a trading business when you say, oh, I don't know what my loss is. That's kind of a hard thing to do. People do it, of course, but it's a hard thing to do. You have to know your downside so that you can bet and use the proper risk management. And stop outs do that, right? You know exactly, and it's extremely rare that something will go past your stop out. Maybe a gap, maybe. I mean, I've been trading now robots. I've been trading since 2004 and robots since 2012. And it's very, very rare to have it go past your stop out. Stop outs usually hold up. But furthermore, there are just no unlimited losses when you use a stop. There's no unlimited losses. Remember we talked about last week, if you don't use a stop loss, you take the next trade, it could be it. That could be the end of everything. With a stop out, you know it's not the end, right? What is the one thing? I read about trading. I know some people say they don't like to read about trading. I still love to read about trading as much as I can, as much as I can find something interesting. And the stories that you read are hedge funds and banks and individuals who lose everything. And how do they lose everything? It's not from stopping out. I've never read a story. I've never heard of a story where people say, no, we had a series of stop outs, right? All the hedge fund managers, we look at our top 40 ranked hedge fund managers, they all stop out. And they're all still in business. And remember, we looked at those? Some are in business 30 years, 40 years, 10 years, 20 years. They're in business a long time. Why? Because they use stop outs. You don't blow up a $5 billion fund by using stop outs. I've never heard of it. Have you? If you have, show me the story because I love reading about it, right? Nobody goes broke, bust, finito, due to a bunch of small to medium stop out losses. It just doesn't happen, right? You always go bankrupt, at least to my knowledge. As I stand or sit here in front of you today, I've never heard of someone going bankrupt because of stop outs. It's only because of huge, unbracketed, unstopped out losses, okay? So there are reasons we use stop losses. There are reasons I trade with stop losses. There are reasons for it. But what's the bad news about stop outs? Well, number one, and there is no number two, they lose, right? That's why we're talking about this topic today. If you use stop out, you're going to lose for sure. There's no argument. There's no discussing. There's nothing you can do about it. You're going to lose. And as I said in A Few Good Men, you're going to lose huge. Well, that's not necessarily true. I just wanted to do the quote. You're for sure going to lose, and you can possibly lose for an extended period of time. What's extended to you? Well, it depends on your patience level. An extended period of time can mean a couple days, a week, a month, a couple months, right? When you stop out, it's just it. That's the contract you sign. Whether it's physically or mentally, you are going to lose. And guess what? When you stop out, that money is gone forever. Doesn't mean you can't win it back with further trades, but that money has been removed from your trading account and it's never coming back, at least on that particular trade. And the next trade might get some money back for you, but it's over. And that causes these periods where we say, quote unquote, nothing is working, right? And that's my quote, by the way. I'm quoting myself. And it sucks, right? Furthermore, if you like to watch your trades every day, and I have people who email me saying, I just love the action. I just love being in trades. I've gotten a complaint where it doesn't trade enough. Can I just trade 3 or 4 times a day, right? People love looking at their screen and being in trade. I'm not particularly one of those people, but there are millions probably of people who do that. If you like watching trades or you need your money soon, like at the end of the month or whatever, you're going to withdraw from your account, watching a stop out is like lingering torture. You see the price go against you and it's just like, it just makes you feel bad all day, right? Now, I don't need a lot of trades per day, but I do need to withdraw money at the end of the month, right? So when you know you need the money and you're watching something slowly stop out all day or go through a series of stop outs, it can be torture. And it can make trading very unfun. We didn't get into trading to stop out. It's not why I got into it. It's not why we watch movie Wall Street or any other good trading movie. It's not why we got into it. We didn't get into it because we like to lose, right? It's just not why. I don't care. People can say they're good at losing. Trend followers can win only 35% of the time, but they didn't get in it because they love losing, right? And stopping out is guaranteed losing, right? So that's why stop outs suck eggs. Now, let's talk about some summertime puke, right? That's my very colorful way of saying trading hasn't been that great. Nothing in my portfolios has been that great, and that's various styles. Nothing has been that great for the past month or so, or longer. For example, this particular month, my Hornet big diversified portfolio and the Specialist is actually worse, significantly worse than the Hornet. If you specialized, this hasn't been much fun for a month of trading at all. But if we go to that particular spreadsheet, take a look. This is my updated spreadsheet, and sorry if it's too small, but it's down a little bit as it's been down previously. Right now, there's been a little bit of a comeback in the Hornet. So this month, this last week or so, has been a little bit better. So the losses are being mitigated, but it's been basically a not fun trading month when the only really good trading has been lately, and it's the end of the month. That's not that good. And furthermore, I didn't show that the Aussie yen has been a pain in my butt, and it's, if you're down approximately $99 on a hypothetical $10,000 account, the Aussie yen has been down $458, right? Give or take a dollar here or there, right? So the Aussie yen has destroyed this portfolio all by itself, right? So that's been fun to watch that stop out and ruin the entire portfolio. It's been a good time. Breakout is about break even. It's slightly positive for me. I actually took a wrong trade. I actually got a stop out that I had the robot set up wrong. Yeah, that's great. I pride myself on never making stupid mistakes ever, and I made a stupid mistake. But it wasn't that much money. But I am slightly up on it, even with that silly corrected mistake. But it's about break even, so that's not fun. And we talked about it in the blog post yesterday. The moving average trend following portfolio is down this month. And the previous month, not much fun either, as you saw by the numbers and if you saw the blog post yesterday. And the breakout was also down last month. So it's been 2 months of summertime puke, shall we say, right? So do you see a pattern? We've got various styles here. We've got day trading. We've got a specialized day trading. We've got trend following breakout. We've got trend following moving averages. And none of them in the past 2 months has been extraordinarily good, right? Do you see a pattern? The pattern is in certain markets that have no conviction, which we haven't. We've had all sorts of announcements from Brexit to the Japanese yen being manipulated, Fed decision yesterday, blah, blah, blah. There's all sorts of things that have been happening to make the market have no conviction. And when you don't go in one direction, when you change your mind and go this way and come back, stop outs are going to happen. They are inevitable. And they're inevitable in every style of trading imaginable. I'm not saying that there's no one who's been winning lately. I'm just saying I've seen with my own eyes multiple time frames, multiple strategies, multiple methodologies, all have been puke for 30 to 60 days, right? If the markets are indecisive, breakouts are going to break out and then immediately reverse to a stop out. Moving average crosses are going to, oh, look, it's a new trend. Whoa, news came out. No trend, stop out. Or time exit out in a lower, different direction. And if you're trading pullbacks in an indecisive market, that's not a pullback, right? It's a reversal of trend. Your pullback, Aussie yen, becomes a change of direction and it goes the other way, right? The thing is, if you're going to be a trader and you're going to use stop outs, and we know why you would use stop outs, there's just no way around it. And what should you do? You just accept it and you move on and you wait for it to turn, because we can see either you've actually traded it or you can look at the data. There were great months, 4 great months to start this year in most trading strategies, and it's just been bad lately, right? If you're going to trade with stop outs, there's no way around this pukey period unless you never lose, right? We talked about what to do when nothing's working. Well, this is one thing that you can do. If you trade a 100% system, which is, remember, not every trade wins, but every series of trade wins. If you trade that, that can be an antidote, right? The antidote to a market like this in the past whatever number of days, in a market that has a short-term identity crisis or multiple crises, right? The antidote is to not have a stop out. If you get into a trade and the market changes its mind and then changes it back tomorrow, that's a bunch of stop outs, which is what you've seen in the Aussie yen. You've seen it change its mind and then change its mind again and then change its mind again and stop out every time. And the fun thing about the Aussie yen is it's such a quick moving currency pair that you get those stop outs, whereas some other currency pairs are slower moving and not stop you out. Oh, the Aussie yen will definitely stop you out, right? It will definitely win a lot too, but that's beside the point. If you had a market that's changing its mind back and forth, if you don't trade with a stop loss, none of these changes make any difference. And you eventually get to your target without suffering through a stop out. If you're trading a system without stop losses, you don't get that sinking feeling, right? At least hypothetically. You don't worry about the Fed decision. You don't worry about short-term changes. You don't worry about all this stuff going back and forth or going up, going down. You don't worry about that, because if the market changes its mind, you can always try to work your way out of trouble and finish up okay, right? If the market switches, you still have a chance to make your money, right? Now, don't believe me, right? I mean, you should believe me because I aspire to tell you the truth. Let's take a look. Here is my no stops 100% portfolio. Why don't you take a look at this month, right? This one, I'm just watching. This is on my TradeStation platform. I'm just watching, and that's been up. Oh, and the previous month was up too, and blah, 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 right? This is one of those where this is used as fair value. This is the way I used to trade back in 2010 when I made all my money, and why did I ever switch, right? Would you say that nothing's working lately in the no-stop portfolio? No. And here's the other one, which is more of a trend-based portfolio. Again, not using stop-outs. This is how it's done on a hypothetical $10,000 account quite well. And I'm actually trading this live now on a demo multi-charts account. And I'm trading the Aussie dollar. I've seen a trade work on that. Euro dollar just had a winning trade right before I got on the webinar. And the New Zealand dollar, I believe I'm trading. No, pound dollar, excuse me. Those three. I've got those up, and I've seen all of those trades win. So I've seen this work with my own eyes. This is not hypothetical. The only difference is I make more in real life than I do on the spreadsheet. I'm finally back to that. So that's kind of cool. But the bottom line is this. Look at the previous 2 months when you don't stop out, right? Seems to be working. The bottom line is this. If you like to watch your trades compulsively and you use stop outs, you can have some problems. You'll hate your trades, right? You'll hate being in trades when you have a stop out looming. When you see a market going up and a market going down and a market going everywhere, you start getting that queasy feeling. I know, I've had the feeling. And you'll start hating being in that trade, or you'll start hating being in it for a long time, right? As if you get a trade that opens in the early afternoon or whatever, and it lasts a couple hours, in a market that's been indicative, or the market that's been acting the way this one has been, the longer you're in, you're like, oh no, is the market going to change its mind, right? When things are going well, like it was at the beginning of the year, you're like, no, I don't care if I'm in, it's going to work out. But when you have a stop out, you have that clear and present danger of, if the market changes its mind, if a news event comes out, goodbye. Now, it can also go your way, but you get that negative, right? You don't worry about the positive, you worry about the negative. Furthermore, besides hating it, you're probably going to start being tempted to mess with your trades. Oh, listen, I've been in a while. I don't want it to change out. I'll take it out early. And then it goes on to your target, and you miss out on a winner after you've had a bunch of losers. If you're a trade watcher, this market is potentially a problem, and you're going to have to deal with that. Either get over it, or find therapy, or talk to someone, talk to your trading partner, or just look at your spreadsheets again and realize that it's going to come back when the market switches. But along those lines, if you need money, the same thing. If you need money at the end of the month, you might start hating being in trades. You might start messing with your trades. You might start panicking. This is part of the danger. Nobody went bankrupt on a $5 billion hedge fund by receiving a lot of stop outs. However, many traders have stopped trading or watched their account go from 10,000 to 8,000 or 10,000 to 7,000, giving up trading forever. That's happened plenty of times. Doesn't make the news though. However, if you're patient and you can let a stop out portfolio roll on, just keep on going, realize that losses are part of it. The market's not going to stay this way forever. If you're patient, like the trend following and or the systematic hedge fund managers are, they're 100% systematic and they lose all the time and they draw down all the time, but they're patient. That's why they've been in the business 30, 40 years. If you're patient, there are advantages to a stop out portfolio. You don't lose your account. You're not tempted to get greedy. Remember all the dangers, right? There are advantages to having stop outs. You don't have to worry about being in trades for a long time, that you know what's going to be over, and so forth. Remember, as I've said a lot of times, or a million times, hedge funds don't die from controlled losses. Nobody loses billions from controlled losses. And also, remember the dangers. I went over several, I don't know if it was a dozen, was it more? I went several pages of dangers of not using stop outs. There are tons of dangers. It is super scary and super dangerous to not use stop outs, okay? So there are a reason for using stop outs. It keeps you in line. It keeps you organized. It makes you locate your drawdown so you know exactly what to do, right? There are a reason for it, but there is something very strong to be said for not using stop outs. You don't go through periods like you're going through now. You just win, win, win. Now, of course, you can go through lingering trades, which goes into dangers. Trades can last a long time, and maybe for you, that would be a pukey summer. Having a bunch of other robots win while one loses for a month, right? If that's your idea, then if that's your idea of terrible, then again, stop outs are definitely for you. But one possible antidote for such a sucky trading period is to just not use stop outs at all. All right, before I get to the wrap up, let's see if I have any questions, and then I'll wrap it up. Let's see. Okay, let's go back. Hi, Jeff, by the way. I didn't see you before. Jeff, nice to have you. All right, let's go through. Time is fine with Douglas. Excellent. Keep it the same time, says Johan. Excellent. Are you using trade in these? No trailing. Well, day trading is a set stop. Breakout is using trailing stops and a hard stop out. So the breakout has both. The day trading just has a hard stop. 84% win rate for the first trade in this, right? No, not necessarily, Douglas. If you're talking about the 100%, no, not necessarily. It's an 84 overall. That first trade would probably be less than that. I could probably do a couple hours of work and figure that out. I don't know how important that is to know. But like the second, usually when the first one is the losing trade, if you have a series of 4, let's say, the first trade is a loser, and then maybe the next 3 are all winners, and that gets it back. So the first trade is probably not 84%. That's overall trades. I don't know which number in the series that would be. Got it? All right, good. All right, let's wrap it up. I've got a few updates, and let's minimize that. I'm still waiting on the 100% portfolio for MT4. Wes has been extraordinarily busy, and poor guy. But I did text with him today, and he's working on it actually today. So MT4, for anybody who's interested in this, no stopping out stuff, your day is coming soon, and my day too. I'm dying to get this on MT4, dying to. It'll be shortly. But I am at live and demo on multi-charts, and it took another trade. It has taken 2 trades. They're all winners, of course. I mean, what did I say about the no stop portfolio? You go through winning streaks. It's guaranteed. Well, I immediately started in the demo account with winning streaks. I mean, it's not a lie, right? I've traded this discretionary. I've traded it with robots now. I've watched it. I've studied it. I mean, you win all the time. It's the bad times you have to watch out for. But I'll let you know when it's done. The new trend following trade, as I said in the blog post yesterday, the new trend following trade looks identical. So I'm going to work on that, get that together, make that pretty just the way I would like it, and then we can talk more about that. My VPS is working great. Both trades went off perfectly, and both trades made more than TradeStation did. If you're interested in a free VPS, Justin has now offered, if you're a lifetime member through me, then you can get a free VPS, and it does have my robots supposedly loaded on them for you already, which is a pretty cool thing. The problem is you can email me and I can send you the links, but I can't get into your link. It's specially designed for you, and I don't know how they set all that up. That is completely separate from me. Justin is the best customer service person I've ever met in my life, so you can obviously have trouble, you talk to him. But it's pretty darn cool that people who are lifetime members can now get a free VPS from Oanda. So if you want the links to that, you can email me and I can email them back to you. This is extremely important, even though it's been losing. The MT4 July Hornet, no Brexit, The July Hornet results are significantly better. Actually, I just updated this morning, and they're about $60 better on a $10,000 account. Just in 1 month. That's 1 month, $60 better. That's fairly significant amount. So I'm really, really pleased about how MT4 and Oanda are executing at this point. So that's been great. Month isn't over yet, so I'll wait till the end of the month to report finally on that. And remember that you can email me anytime, but I probably won't respond on Saturdays, okay? I'll come back to see if there's any questions. Great. Thank you, Talon. Thank you for being here. Love being here as always. If you have any feedback, email me about time of day, or if you have topics you'd like me to talk about. I have so many topics that I just probably bulldoze right over top of you and just talk about whatever I want to. But if you have topics that you'd like me to address, feel free to email me at that email at the top, and I'd be happy to do a webinar possibly about them. Blog posts on Wednesdays. That'll be the next time you most likely hear from me. Thanks for being here, and I will talk to you soon. Bye for now.